Hello, everyone. Welcome to our bonus Facebook Live for 2025. And believe it or not, this is our very last one for the year. Welcome, welcome, welcome. For those of you who don't know me, my name is Nellie Akalp. I'm founder and CEO of CorpNet.com, and I'm so happy to be here with all of you today. I see a lot of people joining on LinkedIn. There's John. Hi, John. Hi, Mary. And then I see a ton of you on our Facebook group. Hi, Sandy. Hi, Carrie. Really great to see all of you here today. Earlier this year, as you know, we launched a brand new service at the direct request of all of you, our amazing partners and clients. And that service is basically our payroll tax account closure service. So today we're going to be covering payroll tax account setups for those of you who have clients who still need to set up payroll tax accounts since the new year. Since the new year is coming and it's right around the corner. And we're also going to be talking about payroll tax account amendments and closures for those of you who may need assistance with payroll tax account closures because maybe your clients have decided not to process payroll in those states or have closed down shop or whatnot. But really, really excited to be here. I want to take a personal minute here to wish every one of you the joys of the season. And we here at CorpNet are always at your service and just wishing all of you a very safe and happy holiday and hope you're basking up the season filled with joy, abundance, peace, hope, and joy. And really, really just know that, we love our partners. We appreciate all your dedication and loyalty to us and our team. So with that said, let's get into it. Again, the reason why I wanted to do this bonus live today is payroll tax account setups, amendments, and closures are super important, especially when you're coming up and the new year is just around the corner. And here's why this matters so much. When a business no longer needs certain state employer or payroll tax accounts, it's incredibly, incredibly important that those accounts are closed properly. And if they're left open, businesses can face penalties, fine notices, and really unnecessary paperwork and headaches even when they're no longer, needed, or even when that business no longer has employees. So I want to take you through the process of making sure that this is a service that we provide here at CorpNet, payroll tax account amendments, closures, and even as we all know, we've been offering the payroll tax account setup services in setting up payroll tax accounts in any of the 50 states, whether it's the state withholding tax account setup or the SUI account setup. We've been offering that now for years, since 2020. And now we've added these additional services. So since launching this new service of payroll tax account amendments and closures, we've received a flood of questions, and just about closing payroll tax accounts, but also about setting payroll up correctly from the very beginning. So for today's live, I want to spend some time really walking through both sides of payroll, how to properly set up payroll tax accounts, and then how and when to amend a particular payroll tax account or when to close them correctly. And this is especially important for business owners, accountants, all of you CPAs out there, those bookkeepers and advisors supporting your clients across multiple states. So with that said, let's get started and let's go through the presentation. So I want to start with payroll tax basics. Here's a general overview. As you know, in the United States, tracking reporting and paying payroll taxes are required legally to hire and pay employees. Some taxes must be withheld from employees' paychecks, and the employer must pay some as well. Businesses, as you know, when any business hires an employee and wants to pay that employee through payroll, must register for the appropriate payroll tax accounts at the state and federal levels. And sometimes the local level, if there is a local withholding tax, to process employee payroll and file returns. The rules and requirements, as I'm talking to you about it, vary by state, from state to state. But generally speaking, payroll taxes will include federal income tax, state income tax in most states, local income taxes, again, in those states that apply FUTA, SUI, Social Security tax, and Medicare taxes. Now, let's talk about the 10 steps for setting up your payroll for your clients properly. Now, first and foremost is that business, whatever type of entity it is, if it's a sole proprietor, partnership, corporation, S corporation, or LLC, has to have and must obtain a federal tax identification number. That federal tax ID number is the social security for that business, and that's how the IRS identifies that business entity. So first and foremost, you have to obtain for a tax ID number, which is something CorpNet can assist you with and apply on your behalf, and obtain that EIN, also referred to as a federal tax ID, or sometimes referred to as a 95 number. Number two is you have to apply for the state and local tax ID numbers. These include a state unemployment tax ID number, also referred to a SUI account number if it's required in the state. And then number three is setting up that payroll bank account. It's important that you set up a payroll bank account and make sure everything is separate from your personal assets and personal business. Now, you also want to decide on a payroll schedule. Now, common schedules for running payroll include weekly, bi-weekly, semi-monthly, and monthly. Some states may require specific frequencies under different circumstances. Now, the next step is obtaining a workers' compensation insurance policy. Now, this is super important, especially if it's a business with one or more employees. You have to have workers' comp. Last but not least is step 6, determining what potential employee benefits you'd like to offer and what portion of costs will be deducted from the employee's paychecks. Now, there are 3 other steps continued on the next slide as we're looking at it here. Is you have to collect your employee information. What are we talking about here? We're talking about the name of your employee, when they started working for the business, their social security number, their date of birth, compensation details, and you got to make sure you're always crossing your T's and dotting your I's when you're hiring your employees, and make sure that you're onboarding that employee properly, because guess what? You have to be in compliance with employment laws. And employment laws, take it from me, a business owner, they will penalize you if you're not in compliance. So make sure you got your Form I-9 verification processes in order, and your W-4s. It's really, really important that you follow the steps as to how a properly onboarded employee gets onboarded within your business, and you're in compliance with all those onboarding requirements that the EDD or your particular employment development department in your state has as a guidance for you. Next step is classifying your employees into independent contractors or employees, and whether they're exempt or non-exempt. Again, this is a critical step, and I'll tell you why it's a critical step. An independent contractor is much different than an actual employee. With an independent contractor, it's normally somebody who's providing a service to you, and you're not deducting any type of taxes, and you're not controlling any of the work product or how they're doing the work. So there is really no supervision over an independent contractor. Whereas an employee, you are managing them, you are setting the times they report to work and clock out. So there's a lot more management when it comes to an employee versus an independent contractor. So you have to make sure you look at the employment laws versus the independent contractor laws to see whether your particular person that you're hiring for work falls into the independent contractor category or the employee category. And then you have to decide whether they're going to be exempt or non-exempt. And I'll tell you why, because again, as a business owner, I've gone through all of this in the past, is that if, for example, you classify them as an exempt and they're really a non-exempt, again, you can get penalized if you're not paying them for overtime properly. So it's really important that you either, basically hire an HR manager to assist you with these items, or set yourself, up with an PEO, an outside employment organization that can help you through all of this, so you make sure that your HR paperwork is always in order. Step 9 is choosing a pay period. For example, are you going to pay your employees weekly, bi-weekly, on the 5th and 20th of each month? So again, it has to be consistent. And last but not least is manually calculating your tax requirements per employee. Now, there is also, once you get once you follow the 10 steps into setting up your payroll and the payroll tax accounts, then there are steps for processing payroll. Again, a lot of business organizations will outsource payroll processing to a company like Paychecks, ADP, Intuit, Gusto. There's tons and tons of payroll processing service companies out there. There's also Patriot, there's Fingercheck, so tons. But generally speaking, if you as an employer are planning on processing payroll for your employees yourself, here are the steps for payroll for a traditional employee. Number one, you want to calculate payroll taxes and voluntary deductions. What are we talking about here? You want to basically calculate gross pay, any pre-tax deductions, tax deductions, other deductions, and then net pay, which is really the end result as far as what the employee is getting paid, and the amount the employer that is going to be paying that employee. Second step is paying the employees via paper checks or direct deposits. And then third step is recording payroll transactions. Next step is reporting the taxes to the state and federal tax authorities. Now, this is really important because employers must complete tax filings for federal tax withholdings to the IRS. They must also report state tax withholdings to the state's Department of Revenue or other agencies in charge of state income and payroll taxes. And then there's also local income tax withholdings to the appropriate local tax authorities. And then last but not least is step 5, which is remitting payroll taxes to the tax agencies and benefit providers. So what are we talking about here is basically monies that are being withheld from your employees' paychecks must be sent to the appropriate tax authorities and providers of benefits, such as retirement plans, 401k and health insurance. And then employers must pay their federal payroll taxes online using the electronic federal tax payment system, which is also referred to as the EFTPS. And keep in mind, though, when we get to the state and local taxes, methods of payment may vary from state to state. Now, I've listed here bullets of important federal forms that you should be aware of, like Form W-2 is your wage and tax statement. This is pretty much the form that, reports the employee's annual wages, salaries, and any taxes that are withheld from compensation. And typically, employers will send a W-2 out to the employees at the beginning of the year following the last year. Form W-3 is transmittal of wages and tax statements. This basically provides a summary of the annual compensation and deductions the employer reported to its employees via W-2 forms. And then you have your Form 940, which is employer's annual federal unemployment tax return, which reports the employer's annual FUTA liability. Form 941, which is your employer's quarterly federal tax return. And then Form 944 is the employer's annual federal tax return, which is used by businesses that will have an annual employment tax liability of $1,000 or less. Employers must contact the IRS by April 1st of the current year to request to file Form 944 instead of Form 941. Okay. Now, there are other forms as well, and the list goes on here. You got Form 1099, which is pretty much a form that employers will use to report payments made to any non-employee individual or entity to whom a business has paid $600 or more for services. This is what we're talking about, the independent contractors. So independent contractors get 1099 at the end of each year. And then there is Form 1099 miscellaneous income, which is reporting payments made to each person or business entity or entity a business has made in royalties, okay, or rents, medical health care, and certain miscellaneous forms of payment. And then as you go down, you got 1096, which is annual summary and transmittal of U.S. information returns. 1095C, which is the employer provided health insurance offering coverage. And then Form 1094C, which is transmittal of employer provided health insurance offering coverage information retort. This form specifically collectively summarizes the information reported on Form 1095C forms that an employer issued to its employees. Now, how are you as a business or an employer going to prevent payroll tax penalties? Well, it's simple. All payroll taxes have to be deposited with the government in a timely manner, and employers especially have the responsibility to file employment-related tax returns and deposit employment taxes according to the deadline set for your particular business. Now, if you fail to make a timely deposit, you may be subject to a failure to deposit penalty of up to 15%. This also is true if you're a new business or an existing business that's hired an employee and has planned to process payroll, and you want to pay that employee through payroll in a particular state and you haven't set up a payroll tax account. They can also penalize you for that. So it's really important that a responsible staff member within your company take care of these, filings on a timely manner. And if they fail to deposit the amounts withheld from an employee's paycheck, that business may be subject to 100% personal liability, whoever that responsible staff member is within that business. And this recovery penalty is normally triggered when a person with the authority to make payment decisions willfully fails to deposit those taxes. Now, here's some tips for controlling costs. Again, if you meet the criteria, definitely your costs can be much lower if you hire an independent contractor versus an employee. Another way to cut costs is elect S corporation status. Now, why are we talking about S corporation here? Because S corporations are structured as a pass-through business entity, which means profits and losses are passed through to the company's owners and shareholders. So S corporation owners can also be considered employees. So their taxable salaries can be lowered, and there are fewer payroll taxes to be paid by an S corporation. Now, again, as I mentioned to you earlier within this presentation, if you as a business owner or business want to put your employees on payroll but want to make payroll processing easy, you may want to reach out and check out these quality payroll automation service providers such as Intuit QuickBooks, Gusto, Patriot. There's also Paychecks. These are payroll processing service companies that can allow you to onboard employees online and pay your workers via direct deposit instead of by check, by partnering with one of these payroll providers, and the investment can easily be worth the cost. Now, let's talk about closing payroll tax accounts. This is the newest service that CorpNet has launched this year. And what we're talking about here is when a business has set up the required payroll tax accounts, i.e. the state income tax withholding account or the state unemployment insurance account in any particular state, and no longer needs those accounts in those states because they're not processing payroll or paying their employee within that state. What we're talking about here is closing payroll tax accounts. Now, what employers need to know about closing payroll tax account is that when an employer is shutting down a business, switching payroll providers, or no longer paying employees, there are important steps to properly close out payroll tax accounts at the federal, state, and sometimes local levels. Here's what employees need to address: federal, state, and local payroll tax accounts, employee and contractor reporting, and then additional administrative details. Now, what we're talking about here when we're talking about federal payroll tax accounts is the filing the final form 941 or 944, filing your last quarterly or annual federal payroll tax return, and checking the box that indicates it's your final return. Also, your final W-2s and W-3s, depositing final taxes, and then canceling the EIN if applicable. So if you're, for example, permanently shutting down the business, you have to notify the IRS in writing to close your business account linked to your employer identification number. Now, also keep in mind there are state and local payroll tax accounts that also needs to be shut down, such as your state withholding account. You have to file the state income tax withholding return and mark it as final if available. If the state does not provide this option, you have to log into the state portal and complete a change of business account closure request. Most states allow closures to be completed directly through the portal. Now, there's also the state unemployment insurance account. This is called the SUTA, or also referred to as the SUI. You have to file the final unemployment insurance tax return and again mark it as final if available. If the state does not provide this option, you have to log into the state portal and complete a change of business account closure request. Most states, again, allow closures to be completed directly through the portal. And keep in mind, this all may seem super overwhelming, and that's why we are having this Facebook Live here on LinkedIn and through this Facebook group, because CorpNet can handle all of this for you and more in any of the 50 states. There's also local accounts that you may have had to set up within your cities and counties that impose payroll, and those will also require final return and closure requests. And then also keep in mind, if your state requires paid family medical leave and worker compensation accounts, those need to be properly shut down and closed as well. Now, each state has unique requirements. We've listed some of these states for you here. For example, Alabama requires Form SR2. Colorado, as you can see, the wage withholding account must be closed within 30 days. Then you have to, you may have to close a wage withholding account using the address change or business closure. So as you can see, all of these states have different intricacies and requirements, and we are here to help you in any of those 50 states. We also have a bunch of helpful resources that can help you, whether you or your clients are starting a business, you're trying to pick specific business structure for your business entity, and you're wondering whether you should go S corp, corporation, LLC, whatnot. If you have clients with a ton of existing business entities and you're monitoring those businesses for your clients, you can come and set up with us free of charge and enter those clients' business entities in our CorpNet compliance portal. We can monitor them for you on your behalf and provide you with proactive alerts. Another big one that I want to bring up right now, it's the end of the year. So if you have clients that have corporations, any type of corporation for that matter, they need to file annual meeting minutes. Okay, they need to draft their annual meeting minutes for 2025. So if your clients haven't drafted their annual meeting minutes, we have an amazing service that can draft annual meeting minutes for your clients for this year or any years that they're missing in the past. So please check out www.corpnet.com, check out our services, and let us assist you in ensuring that your clients are in compliance this year and they're ready for success within the new year. With that said, and as I see a lot of our existing partners on this live, but if you are somebody who's just joining this live and you're not a CorpNet partner, let me talk to you about the CorpNet Partner Program. So if you're, representing a ton of clients and you're wondering, wow, I really want to offer CorpNet's services to my clients, and I actually want to offer it as my own service to my clients in all the 50 states. Well, guess what? You can partner with us and start offering our services to your clients in a variety of different ways. Let's say you don't want your client to know that we're doing all the back end fulfillment and legwork for you, and you want to pose this service as a service you provide through your firm to your clients. You can partner with us as a white label resale partner and start offering all of our services to your clients and get wholesale discounted pricing from us. So you can resell to attract more clients and increase revenues. Or if you don't want to be the middleman, you can simply, set yourself up with us as a referral partner and start referring your clients to us and having the peace of mind that we're going to take care of them and bring them right back to you. So if you're not already a CorpNet partner and interested in learning more, please call us or log on to www.corpnet.com/partners and check out our CorpNet Partner Program. Now, with that said, before we wrap up, I want to go ahead and open the Facebook Live to questions that we're getting, and I'm really excited to see that the questions are coming in. So let's get going. Great question. This is coming from John. Thank you, John, for joining us today. And the question here is, what happens if a client stops using payroll but forgets to close their state account? Great question. So again, it's really important that if a client stops using their payroll tax account in any particular state, I don't know in that particular state what's going to happen, but most probably that state is going to just keep charging your account, and that account is going to keep going on, and you as a business are going to have to keep, dealing with the filing requirements and the unnecessary headache and paperwork, and it may even cost you money. So it's best if you have clients who are no longer using their payroll tax account in a particular state to either close it properly or come to a service like ours who can assist you in properly closing up that payroll tax account in that particular state. Let's see here. Do we have another question coming up? Okay, this is coming from Sandy. Thank you, Sandy, for joining. What information do we need from the client before beginning a payroll setup order? Great question. So, as you know, CorpNet provides payroll tax registration setups in every state, and we can assist you and your clients in setting up payroll and getting their payroll tax account set up, which is typically the state unemployment insurance account and the state income tax withholding. And generally for these accounts, what we're gonna need is, again, the 10 steps that I went through. We're gonna need the business entity, the EIN number, the name of the business, the names, where the employee resides, so the business address. And all of these questions are on the order form that we provide at CorpNet, and we can intake this information from you. But it's basic information about the business, where the business is conducting, the business address, the EIN, the name of the business, a type of entity, number of employees, when you're planning on hiring or paying that employee on payroll. And all of these questions and more would be taken in through our order intake process with you. Let's see. We have another question coming in from Steve. Are there states that do not allow closures until filings or payments are caught up? Great question. And yes, this is on a case by case. However, there are states that will not allow closures or will accept the closure and put the closure on a temporary hold until all the filings or payments for that particular state are caught up. So again, this is one of those questions that it's a case by case, and it really depends on the state that you're dealing with. And if you have a particular, situation right now, give us a call here at CorpNet, 1-888-449-2638, and we can, research that information for you. Our tax registration specialist can get that information and even process the closure for you. Now, last but not least is, how does CorpNet's compliance portal reflect the status of payroll registration orders? Great question. Our payroll will not only provide you with the alerts that you need but it's going to give you status on each of your payroll, the status of each of your payroll registration orders, not only by entity, but also by state. So every time you are submitting a payroll tax registration request for either a setup or a closure, and it's for a client, we will go ahead and take that information in, we will process it, we will upload it within your portal, and once you log into your portal, you can track the process and track the order from start to finish. We also will provide you with the final filed documents or evidence of the filing, albeit it be an setup or a closure or an amendment, and all of that will be within your portal as well. That brings us to the end of all of our questions that have been provided to us. Thank you again for joining and all of these great questions. Before we wrap up, I just want to say thank you so much for tuning in today. We truly, truly appreciate your time and your partnership with all of us here at CorpNet. I want to wish each and every one of you a very, very happy holiday filled with lots of love, joy, peace, and hope. And just know that we are here for you. We're at your service. And if you need last minute filings, we are open on Christmas Eve, and we are open on New Year's Eve as well. The only days that CorpNet is closed in observance of the holidays is Christmas Day and New Year's Day. I also wanted to let you know that our next live will be our very first live of the year in 2026 will be on January 7th, 2026. And I will personally be kicking off our first Facebook Live of 2026. And I will be the host and joining you. So please mark that date, January 7th, 2026, 11 a.m. Pacific Standard Time. And during that session, we're going to be focusing all of our energies and entirely on the CorpNet Partner Program. This is such a phenomenal program that we have, request over and over to promote it, talk about it, and go through the intricacies of the CorpNet Partner Program so that those of you who are not current partners can become partners. So we're going to be talking about the CorpNet Partner Program, how it works, how to sign up, a walkthrough of our partner portal, how we can help all of you amazing accountants and financial and tax professionals grow your recurring revenue while staying fully compliant and keeping your clients compliant as well. So I really look forward to seeing all of you and more of you in our first live of 2026 on January 7th, 2026 at 11 a.m. Pacific Standard Time. And thank you again. And again, I wish you a very, very safe and happy holiday.